Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going to be analyzing 3 investor-sponsored stocks. So how this was done is that these people gave me a super thanks, and they wanted me to look into these companies. However, once you do this, you leave it up to me to add my own personal opinion. I'm not going to talk positively about this stock just because you tipped me to talk about them. I need to be honest with everybody regarding my honest thoughts about these companies. And the first one we're going to be analyzing today is Sphere. So we're going to be analyzing a Barron's article titled Sphere Stock Drops After Earnings. The company offered no guidance. So we're going to be talking about their latest news updates, future price targets, and whether or not I would personally buy into this company or if I already own this company. After that, we're going to jump over to another article and another stock titled Ginkgo Bioworks, to where this is a very prominent penny stock that a lot of investors seem to gravitate towards. So this is definitely going to be an interesting stock to talk about as well. And to analyze this stock, we're going to be going over an article titled Why Ginkgo Bioworks Stock Was Plummeting on Thursday. So we're going to touch on the recent earnings results, what I think about this company overall, and whether or not it's a good buying opportunity or not. Lastly, we're going to be analyzing a company named Fuel Cell Energy stock, and we're going to discuss why this stock has also been falling, why they are still a penny stock. So at the end of the day, if you want me to review other stocks, feel free to send me a super thanks and I will get to your stock and I will review it. But again, remember, just because you gave me a super thanks, that doesn't mean I'm going to put this stock in a positive light. I have to be honest pertaining to what I actually think the company will achieve, and I need to be realistic about this. So first, let's start off talking about the Sphere over in Las Vegas. As you can see from the outside of the Sphere, they have a plethora of LEDs that allow them to advertise and show various visuals on the outside of the Sphere, while the inner side of the Sphere also has LEDs, and it's mainly used for concerts or more visuals where people can sit down and enjoy the show. But how is this company doing financially? Well, let's talk about it. Currently, Sphere Entertainment, ticker symbol SPHR, is up around 1.27% today. However, after their recent earnings report, they dropped in their overall share price because investors were disappointed that the company had no future guidance for the fiscal year ending in June 2024. And it's very odd for management not to have a projection about what the company could bring in during the next fiscal year. That is very odd. And I think this lack of guidance for the future may be one of the factors behind the recent drop in the Sphere share price, or the SPHR stock price, which recently fell around 4.5% to $31.87. Now let's go over their price targets. Even though it's trading currently at $31.87, very bearish negative naysayers believe this company is going to fall to around $24 over the next 12 months, while other more bullish analysts, professionals, and experts believe this company could surge up to $38 over the next year. However, where do I personally stand? Honestly, I think this company is going to trend further downwards, easily around the $25 mark. So this price target, in my opinion, is actually not far off from what I am personally calculating for the worth of this company, and I'll tell you exactly how I calculated that in just a moment. It also didn't help that the Sphere's other business, named MSG Networks, ticker symbol MSGS, which is a regional cable network that broadcasts New York Knicks and Rangers games, released a report that said that their profits were down 24%, so clearly this is weighing on the Sphere stock price as well in some regard, but let's just focus on the Sphere. Let's talk about what investors are focusing on for the Sphere itself, which had a very large cost to build. That cost would be around $2.3 billion. The Sphere CEO, James Dolan, whose family controls this company, said that the Sphere venue is, quote, already profitable, and that it, quote, kind of depends on how you calculate profit. And I think that is actually pretty misleading, because when we talk about profits, at least for me, I'm the majority of the time talking about GAAP profitability. I'm not talking about adjusted profits or how you can do all these other calculations to say that the company is profitable. I want to know if the company is actually profitable. The CEO said that it generates around $1 million a day in ticket sales, and the ticket prices can range anywhere from $100 or more. Investors are eagerly trying to understand the economics surrounding this Sphere sphere venue because it can do advertisements potentially on the outside of the sphere, and then concerts and various types of productions and movies inside the sphere. But this is what I think is interesting. Although it took $2.3 billion to build, the sphere is currently valued at only about $1.2 billion, to where this company is also roughly $750 million in debt. And to make matters worse, the company's chief financial officer recently resigned effective immediately, and his resignation came after an angry bout of yelling and screaming, according to the New York Post, with the CEO, to where the CEO came out with a statement that said that the chief financial officer or CFO wasn't a great fit. So I think this is very odd considering that the chief financial officer left in an angry bout and how the company refused to give guidance for the fiscal year ending in June 2024. So there's a lot of ambiguity surrounding this stock, and I would sit back for a while on this stock to wait for it to become substantially cheaper than what it's trading at right now. And currently, like we said, it's trading at around $31.87, but I think that's going to drop down easily between $20 and $30. But that doesn't mean that this company isn't going to be a long-term investment in the future, but as of right now, they have not earned my investment. You really have to show me some foundational fundamentals, great profits, or something that would cause me to invest. And as of right now, the sphere just hasn't done that for me, but I would love to hear your thoughts down below. Like I said, I just have to give my honest opinions about these, and it really doesn't matter if you gave me a super thanks to go over what these companies do, because I'm not going to hold back from my honest opinions about these. Next, let's talk about a penny stock named Ginkgo Bioworks, which has prominent backing from investor celebrities and very prominent investors, legendary investors I even should say, such as Cathie Wood, which in my opinion is more of an investor celebrity, and then the legendary investor would be Warren Buffett. So what does this company do? Well, let's talk about it. This company essentially is trying to code DNA like you would a computer program. And by doing this, they can essentially make biological robots that could form anything they want. So this is really cool stuff, to where they can make organisms self-assemble, self-repair, self-replicate, and much more. It's really cool what they're doing, and it kind of seems like science fiction as of right now. However, they have seen some promise for their various projects and platforms. And some of the things that they are involved with would be therapeutics and vaccines, RNA services, enzymes, proteins, small molecules, and many other segments. So now let's dive into this company's fundamentals and financials. So let's first talk about why Ginkgo Bioworks stock was plummeting on Thursday. Well, Ginkgo Bioworks, ticker symbol DNA, is currently down around 0.66%. And recently, investors have sold out of this biotechnology company following their latest publication of their recent earnings report for the third quarter, to where their stock price dropped by around 15%. During the third quarter, Ginkgo Bioworks' revenue fell by around 17%, to around $55 million for the quarter, but this was anticipated by management. They said that they were going to be very volatile in their overall revenue, and despite an encouraging 51% increase for their cell engineering segment, clearly, this did not help their overall drop enough, according to investors. On top of that, more good news is that this biotechnology company cut their non-GAAP or adjusted net loss by more than half, which is fantastic news. Originally, they had a deficit of around $670 million, and they cut that deficit down to just $303 million, or 16 cents per share at a loss, which is very impressive in my opinion. That's what you would want to see as an investor. However, Ginkgo Bioworks still has a long way to go, as they believe that their new cell programs will amount to $80 to $85 million worth of revenue in the full year of 2023, but this is yet to be seen. This is why for the full year of 2023, they anticipate that they will bring in between $250 to $260 million in total, which is a far cry from what they brought in back in 2022, to where they brought in around $478 million for that entire year. So it's not good how their revenue is decreasing, and this is causing investors to lose faith into this company, and that's why their share price is decreasing. Currently, they trade for just $1.25, while bearish negative analysts believe this company could fall to around $1.20, while others believe it could surge up to $12 per share. And I'm going to leave that up to you to determine what you think. For me, I don't really know how to evaluate this company as of right now. I would need more information on this company so I can get a solid share price target. So as of right now, I'm agnostic about this share price target, but it is trading rather cheap, and it is definitely an interesting concept to to where if they could prove their overall value and that their technology works and that they have a long-term growth runway for their technology, then this could be a very lucrative long-term investment. But as of right now, I personally am just going to sit and watch this company. Meanwhile, the CEO and co-founder Jason Kelly said that they have continued to expand their customer base and partnerships this quarter. And let me tell you, that is a very true statement, because get a load of these partnerships. They landed a 5-year partnership with Alphabet's Google unit. And if you didn't know, Alphabet is the parent company to Google. And they are also covering cloud and artificial intelligence services and its RNA research collaboration with a pharmaceutical giant named Pfizer, which I'm sure you have heard of. So these partnerships are crazy big partnerships, and it does go to show that Ginkgo Bioworks is more than just science fiction and that they actually have codable biology, as seen by their massive partnerships with large institutions who do not do business with meme stocks or companies who can't back up their claims. So overall, I would say this is rather positive news, but in the meantime, we could see the share price go lower. However, as a long-term investment, this company could actually be insane if the $12 share price is actually valid, because you could get a load of upside from this stock. But in the meantime, I personally am agnostic, and I have this company on a watch list. Lastly, let's talk about fuel cell energy stock. So what is fuel cell energy stock? Well, this company is a hydrogen fuel cell company. While the most bullish analysts believe this company could surge up to $2.50, and more negative analysts believe this company is worth around $1, which is kind of where the current share price is right now. Now, what's interesting is that their peer, which is Plug Power, also dipped after earnings. So fuel cell recently dipped by around 6.3%, and Plug Power recently dipped by 39%. Plug Power's stock plummeted recently after they issued an ongoing warning due to a $3.8 billion deficit, negative cash flows, and projected operating losses. Apparently right now, there is a supply chain problem, specifically in regards to hydrogen fuel cell networks, which is why their third quarter net revenue of $198.71 million and their net loss of 47 cents per share both missed consensus estimates, which is why Plug Power is absolutely plummeting right now in their overall share price. And since fuel cell is a part of this industry, they are also decreasing. When we hear supply chain challenges in North America regarding hydrogen fuel cell networks, this raises concerns not only for fuel cell, but also the entire fuel cell industry. These problems are going to reverberate throughout the entire market, which means that hydrogen fuel cell stocks could trend even lower. Now, for me personally, I like hydrogen fuel cell. I actually own a lot of hydrogen fuel cell stocks because I think the synergy between hydrogen and electricity is very underappreciated. We have a lot of electric vehicles, but to make those electric vehicles even more efficient, you can pair them with hydrogen fuel cells. And this makes them even cleaner, and it makes them have a lot more power. But as far as fuel cell and Plug Power go, I would ease off the gas as of right now. Let's see how low they can trend, and then once we've identified these companies finding support in their share price, then we invest, and then we can ride this wave back upwards. But in the meantime, this is a very risky time to invest into hydrogen fuel cell stocks. So again, wait for these companies to find supports, then invest into these companies when they start trending sideways, and then you're just going to wait for a breakout in the future, because I do believe hydrogen fuel cell will play a large part going forward. So with all of that being said, I would love to hear your thoughts about Sphere Entertainment, Ginkgo Bioworks, fuel cell, and even a Plug Power if you want to. And if you want me to review other stocks, don't forget to send me a super thanks. But remember, I'm not just going to talk positively about these stocks because you've suggested them to me. I'm going to be honest. I'm going to tell you if I own them or not and what I project their future to be. With that being said, always make sure to do your own research. Subscribe if you are new, annihilate that like button right now, and I will see you in the next YT video.